Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Well, thank you everybody for tuning in today. Today I'm going to be kicking off proceedings by talking about Europe's financial services landscape after Brexit. Now, aside from this obviously having some personal significance to me as a Brit living in Luxembourg, in the context of today's event it might seem a kind of a strange topic, but in fact it makes a great deal of sense for two main reasons. Firstly, it makes sense because what happens in Europe matters in Southeast Asia, and what happens in Southeast Asia matters in Europe. I think COVID-19 in this sense has been a wake-up call to all of us, showing us just how interconnected the planet has become, both in terms of person-to-person contact, but also in terms of supply chain. And the links between Europe and Southeast Asia in this respect are actually pretty strong. ASEAN countries as a group represent the EU's third largest trading partner after the US and China. And the EU was ASEAN's second largest trading partner. Bilateral trade in services in 2019 between the two regions amounted to over 93.5 billion euros, and in 2020 FDI flows from the EU into the ASEAN region totaled around $10 billion US. So it matters to those of you in Southeast Asia what's happening here in Europe and vice versa. But why does Brexit in particular matter? Surely it's now been done and dusted with the UK deciding to leave the EU on the 1st of January this year. And it doesn't seem, despite some relatively minor fights in the English Channel around who gets to fish where, like there's really been a substantial impact. Now, it may not obviously have been the headline-grabbing chaos in the UK, but behind the scenes, there has already been a massive tectonic shift, with the consensus being that the UK will lose at least 4% of its GDP over the next few years. In our specific area of interest today, that of financial services relations, we're already also beginning to see the consequences of this decision play out. For financial services, Brexit boils down to essentially one major problem, and that is the loss of passporting. By passporting, obviously, I'm not referring to the small paper documents that we carry with us in our pockets when we go to airports, something that unfortunately has been sadly lacking in my case over the last 18 months, but rather the financial services passports that allowed firms to be able to base themselves in London, regulate themselves via the UK regulators, and then translate that regulatory status into the provision of services across the EU single market. Brexit has meant that this is no longer possible, and access to the single market is no longer available to financial services firms basing their headquarters in the EU solely in London. Financial services providers obviously saw this coming a long way off, and practically as soon as the results of the referendum were announced back in 2016, they began to put contingency measures into place. To put this in context, a recent report by the UK think tank New Financial has tracked over 440 firms in the UK banking and finance industry that have responded to Brexit by relocating parts of their business or moving staff or setting up new entities in other centres in the EU. Banks are moving more than £900 billion in assets out of the UK and into other locations in the EU, with insurance firms and asset managers transferring more than £100 billion in assets and funds. Now, Brexit in that sense is done. Financial institutions have already flipped the switch and are now not solely in London, but also elsewhere. Other financial centres in the EU, as the result of these moves, have become more specialised. To take a couple of examples, Amsterdam has by and large attracted the trading venues, and investment banks have primarily gone to either Paris or Frankfurt. In the case of Luxembourg in particular, again, the new financial report I highlighted earlier tracks 95 firms moving their EU bases here, with a particular focus on asset and wealth management, corporate banking, payment services and insurance. Now, so much for what has already happened, but Brexit also has major consequences if we look forward. Firms with bases both in the EU and in London will have far more complex considerations about where to base new staff or new operations. Global firms looking to establish a presence in Europe will have to take a more nuanced view of which location best matches their business development opportunities. No longer can London function as the default option that makes sense in all circumstances. Now, obviously, the shift here will be slow and gradual, but it is coming. And those should be perhaps some of the thoughts that stick with you today as you listen in Thailand or Vietnam or Singapore or Malaysia or Indonesia or elsewhere in Southeast Asia. What does Brexit mean for my business in the long term? When I look to internationalise in Europe, where would be the most sensible place for me to do so? Now, the answers to these kind of questions can't be hashed out overnight. They take a long time to develop. Now, this might all sound a little bit daunting, but it also brings with it some fairly significant opportunities. Now, the first opportunities are the intrinsic ones that are brought about by the EU single market. And these opportunities don't just evaporate overnight as a result of Brexit. The EU, post-Brexit, is still a huge market of 450 million consumers, 23 million SMEs, and over 7,000 financial institutions. It still operates based on the same rulebook for financial services across the bloc, which allows you to base yourselves in one location within the EU and provide services across the EU single market. So developing in the EU, therefore, allows you to bring your knowledge, your expertise, and insight to a wide investor base and use the same rules to do so. Then the second opportunities are the ones that are emerging as we exit from the COVID-19 pandemic. The €750 billion recovery package the EU launched this year will fundamentally reshape the way EU member states' economies function. With respect to financial services, there are two key initiatives in this package that I'd like to highlight today, because I think that they have not just EU significance, but also international significance. The first is the European Green Deal. Europe is already leading on ESG finance, but this is going to be a major growth area both in Europe and internationally for many years to come. From a regulatory perspective, the EU has already developed a green taxonomy and is rolling out sustainable finance disclosure reporting. And then from an investment perspective, the EU Commission has pledged to mobilise €1 trillion in sustainable investments over the next decade. And this is something that we would expect would also act as a catalyst for the private sector to increase its allocations over time. The challenges ESG finance faces are global and they need global solutions. So therefore, there are huge opportunities to work together in this field going forward. The second initiative that I'd like to highlight today is the Digital Financial Services Package. This will make the EU increasingly internet-based, as well as providing new rules on a range of topics from crowdfunding through cybersecurity, all the way to crypto assets and tokenization. Together, this will lead to even more opportunities in an integrated financial services environment in Europe, and many more opportunities for international fintechs to scale their presence in the EU. So to bring it back to the starting point of what does the EU financial services landscape look like after Brexit? Well, if I were to sum it up, I'd probably say it looks increasingly multipolar, it looks increasingly digital, it looks increasingly green, and it still looks quite complex. But you don't obviously have to deal with that complexity all by yourself. Luxembourg and the EU in general have always been strong proponents of building bridges across borders. So I'd therefore actively encourage you to talk to your European counterparts. Talk to them and together work out where your areas of common interest lie. And with that, I'd like to hand over now to some other people who might have been through similar thought processes themselves. And I'm delighted to hand over to my colleague Philipp from Restorff, who will guide his panelists through the topic of how to go about raising funds for sustainable projects. Thank you very much.
Good morning, ladies and gentlemen in Europe. Good afternoon, dear guests in Southeast Asia. My name is Philipp von Restorff, Deputy CEO of Luxembourg for Finance. I have the pleasure of moderating today's panel on raising money for sustainable projects. Raising money for sustainable projects requires knowledge and willingness to not only profoundly change our business models and operational models, but also to engage differently with our stakeholders. In our quest to mitigate climate change, to cure the environment, to improve social conditions, we, the financial industry, have a crucial role to play. For centuries, the financial world has enabled economic development, job creation, and prosperity. Today as well, the financial industry is at the root to the transition of the circular and green economy. It has to play a catalyzing role when it comes to shaping a sustainable future. To finance economic, social, and environmental projects, the financial industry has to undergo itself a paradigm shift impacting almost any aspects of its business. I am very pleased to discuss some of these aspects with three financial services professionals from different horizons. We will discuss, among others, how their own organization have incorporated ESG considerations, how COVID has extended the scope from environmental to social aspects, how far funds and other financial vehicles have stepped in raising money for sustainable projects. What are the investors' expectations? And what are the remaining challenges of the financial industry? I am delighted to introduce to you today's panelists. Connected from Malaysia, Rejina RAhim, Managing Director and Country Head for Nomura Asset Management's Malaysian businesses. She is Nomura Asset Management Group's first woman and foreigner to head their overseas branch. She is also the Honorary Consul for the Grand Duchy of Luxembourg in Malaysia. Welcome, Rejina. With me here in the studio, Laetitia Hamon, Head of Sustainable Finance at the Luxembourg Stock Exchange. She is responsible for the exchange's sustainable finance strategy and related projects and leads the expert team at the Luxembourg Stock Exchange UN-awarded platform for sustainable finance, the Luxembourg Green Exchange. With me also Anthony Simsic, CEO of the Bank of Singapore Wealth Management Europe. Bank of Singapore Wealth Management Europe runs European operations out of Luxembourg and has a branch in London. It is providing customers investment advisory and portfolio management services throughout the European continent and the United Kingdom. Anthony oversees all Luxembourg and London operations, as well as a large team of European bankers in Singapore. Welcome to you. To get directly into the topic, and it is always interesting to know how people integrate in their organizations ESG considerations, I would ask all my panelists how their organization have implemented ESG considerations. And I would like to start by you, Rejina.
And thank you for having me on this panel. I think I'd like to start off with the mission statement by our founder, Tokushichi Nomura II, where he actually mentioned that Nomura's mission is to enrich the nation through the securities business. And so with that, basically, it paints out the culture in Nomura, whereby prospering with the community is actually very, very important. So although ESG and SRI has only just recently taken off globally, Nomura was actually one of the first few Japanese institutions to be a signatory to the UNPRI. We're fully cognizant of the fact that it's not possible to have a one-size-fits-all approach to ESG. Thus, what's mirroring, what's actually happening globally in our UK office is actually quite different from what's actually happening in Kuala Lumpur, for instance. So, but actually in Malaysia, we've been very, very lucky because we've been focused towards ethical and Islamic compliant investments for the last 60 years when the major government-linked institutional funds were set up. so commonly known as government-linked institutional companies. So they are called GLICs. Their investment approach has always been premised on non-exposure to the SIN stocks, which share similar rationale to sustainable investments. At Nomura, especially in the Malaysian office, we don't view ESG or the larger sustainable investments as a thematic trend. So we see this as doing the right thing and embracing it holistically. We recognize that the Europeans are clearly ahead of the game in respect to adopting ESG, but given the different developing standards and culture in other parts of the world, we believe in active engagement as the only way forward. So in terms of our screening methodology, it's not just negative, but we do use different approaches, and we do strictly, encourage corporate engagement as far as possible. Thank you.
Thank you very much, Rejina. Anthony, please follow up.
Certainly. I think it's very much about investing. Money-wise, it's investing in terms of time, and it's investing in terms of purpose. So we've partnered up with a lot of very well-known groups around the world in order to make sure that from a product development perspective, we rise to the challenge. From a time perspective, it's also the education of our staff and ideally, humbly, of our clients and prospects. And from a governance perspective, it's important to note that we now have a sustainability committee, which is basically a real governance committee of the group, alongside an executive committee or a risk committee. We think that you now need to have a sustainability committee where all of the actors and stakeholders of a large institutional player like us or many others are able to discuss and bring forward changes which are necessary, as you were saying in your introduction, Philipp.
Thank you. We will come back to this important aspect of awareness raising and education. But before doing so, Laetitia, the Luxembourg Stock Exchange and its Green Exchange. Would you like to introduce it?
Yes, sure. Thank you, Philipp. At the Luxembourg Stock Exchange, we actually integrate ESG in various aspects of our organization. We started back in 2016 with the creation of the Luxembourg Green Exchange, when we started with green bonds and then evolved in displaying social bonds, sustainability bonds, and sustainability-linked bonds. We are now the leading platforms for the display of such securities, with more than 1,200 securities there from 200 issuers in 40 countries, so we have a global reach as well. That's our role as a market operator, but we also integrate ESG in other aspects of our activities. We integrate it as an investor. We have an investment portfolio where we've decided this year to integrate ESG criteria in our investment policy. And last point is, as an employer, we have a corporate social responsibility plan around 4 pillars that are people, business, communities, and planet. And around that, we also integrate ESG as a responsible employer.
Thank you. May I stay a little bit with the Green Exchange? So you have been launching the Green Exchange in 2016. Now you have sustainable bonds and other categories of sustainable bonds and green investment funds who are listed there. So as you all know, COVID-19 has taken a huge toll on all societies all over the world, but it somehow also has accelerated sustainable finance and especially widened the scope from E and to include also the aspects of the social aspects. So how has this translated into new debt instruments and how do you see the development in the future?
Yeah, you're right, Philipp, in saying that sustainable bonds really proved to be an efficient and powerful tool for a recovery after the pandemic, or if we're still in the pandemic. They are a powerful tool for that. And just to show a figure that is really important and that shows that acceleration, the first green bond was issued back in 2007 by the European Investment Bank, and it took 13 years until we reached the first trillion of cumulated green bond issuance, and that was reached in October 2020. But this year only, we are going to reach with the sustainable bond issuance another trillion. So that really shows how that has accelerated. That's the first point. A number of corporates have issued sustainability bonds in that context, or social bonds. I can give, for example, the example of the Kingdom of Thailand, who has issued a sustainable bond of the equivalent of 1.3 billion. And the use of proceeds for this bond are used for clean infrastructure, but also for public health expenditure, notably in the context of COVID. And also they are trying to finance SMEs that have been hit hard by the pandemic. So you can see how this tool can be used. We've also seen the increase of social bonds. Social bonds were the fastest growing segment back in 2020, and I think they are going to be also this year. If we look at the first semester of 2021 compared to the first semester of 2020, social bonds issuances have quadrupled. And they really are trying to address those social aspects linked to the pandemic. On another point that is important also to mention, that's on the EU side. The EU has developed a EU SURE program that is dedicated to help workers that are impacted by the pandemic. That's a 90 billion euro program. And the bonds that have been issued under that program are also displayed on the Luxembourg Green Exchange.
So encouraging news on the sustainable debt side. Moving to the investment funds side. Anthony, according to a recent study published by the Luxembourg Investment Fund Association, in 2020, the demand for sustainable funds has continued to grow and now exceed actually the one of conventional funds. The share of net assets of funds domiciled in Europe already amounts to 11%, and new product development is increasingly taking place. Could you comment on the outcome of this study? How would you assess it?
I'm sure the numbers are correct. There's clearly a regulatory push, and everyone has seen it. So that drives the product development, but it doesn't stop at the regulatory push. I think the question for investors has shifted over the last 4 to 5 years, and what used to be potentially an alternative to a more, let's say, classic or traditional range of products, irrespectively of the asset class, now is moving towards a real standalone product shelf. And I think that's particularly interesting. If you're an investor and you want to incorporate ESG considerations, whether you're in Europe or in Southeast Asia, why are you doing it? Are you doing it because you understand the value, the intrinsic value of your investment, and how it can have a purpose, how it can change matters? Or are you doing it because you feel you have to, and if you don't have an alternative, then you may have an issue? And I think we've moved really from the latter to the former, which is great news. And it's probably simpler to do it in an asset class such as investment funds, which are easy to distribute in close to 100 countries in the world nowadays, at least for UCITS mutual funds.
Thank you, Anthony. Rejina, what would be your perspective on the development of sustainable investment funds?
So I think the potential for sustainable funds is absolutely massive in Southeast Asia. ASEAN, the 10 countries that make up Southeast Asia, is home to about 661 million people. And basically, the region has transformed because of the rising urbanization, the population growth, and the fact that a lot of the population is also fairly young, and increased income levels and the digital technology adoption is actually making it one of the biggest drivers of global wealth creation, right? So if we look at one of the reports recently by Credit Suisse Wealth Report 2021, it was actually interesting to note that because the overall wealth actually it was impacted because of COVID. A lot of the investors in the region were actually rethinking their strategies, and in the process has actually made a lot of the investors been a bit more socially conscious. So if we're looking at the summary of sustainable funds in Asia, and Morningstar actually has quite good data on this, you can see that the numbers are going very, very strong in Asia, and even in Southeast Asia. So in Malaysia, for instance, the number of SRI collective investment schemes, funds, which is similar to UCITS, basically double within the first 6 months of the year. And then on the institutional side, we're also seeing, the bigger pension funds, including the Employees Provident Fund, which is basically one of the 12 largest pension fund in the world, has actually required their external fund managers to show their ESG preparedness as part of their assessment of the external fund managers, which is obviously a game changer, because obviously the corporate culture will also have to change the way they do things if the big pension funds are requesting such behavioral change. But I'd like to also share a quick note about the Escape 2021 Progress Report on SDG. It's actually interesting to see that the region can only meet 15% of the 2030 targets. And a lot of it, 1/3 of those actually will be dealing with good health and well-being. But data availability is basically a major challenge. And, so I think that's a good start for us to start talking about the challenges of sustainability. Thank you.
Yes, correct. Anthony, Bank of Singapore Wealth Management serves high net worth individuals, family offices. So my question to you, according to the Global Family Office Report in 2018, done by Camden Research, close to 1/3 of family offices of significant size are now engaged in sustainable investment. And apparently the vehicle mostly used for investing capital is private equity. So has this trend been confirmed since?
Absolutely. I wasn't aware about the number, 32%, but I'm not surprised. If you look at single family offices, so typically family offices that will look after owners of large businesses or large estates or basically large wealth amounts, it's quite logic that they have the capacity to make a change more easily than retail or affluent or more mainstream high net worth investors. They have a battery of advisors and they're very much interested in private equity. I think in their portfolios in general, alternative investments tend to represent up to about 30% of the portfolio. So outside of hedge funds, outside of real estate, private equity in general has always been an extremely important asset class. Now, if you look at the generation of ideas around the ESG thematics, especially early stage, small ventures, where their capital can actually help move these from early stage to sometimes pre-IPO or sometimes candidate for larger investment funds like the ones you will find at Nomura with Rejina, for example, that's where they can make a real difference. So it's important to continue to look at that number, how it progresses through time, but I think that's definitely the asset class where we can see attraction very rapidly for the coming 3 years and where flows of capital will have a decisive impact. Because if you finance a great idea and a great project early stage, that's how you make it the unicorn of tomorrow, especially in the ESG theme.
If I may add,
of course.
Also, on that side of private equity, I actually find that the private equity space and the bond space have some similarities. They are buy and hold investments, at least for the time being with the bonds. And so you have time to engage and you have time to set KPIs, ESG-related KPIs, in your invested companies or in the projects that you invest. So this really enables to measure the impact at the end, and that's what we are looking for. Also, on the private equity side, the question that I have, and it's not answered yet, is how those non-public companies will disclose, because they don't fall under any disclosure requirements. And so you need to get that data to be sure that you create an impact. So that really is the key point in there. Though what we see also on the private equity side, and we've got a very recent example that is quite interesting, is EQT, the Swedish private equity house, is quite famous, that has launched a sustainability-linked bond recently. Mm-hmm. And the concept of that instrument is extremely interesting. Actually, EQT as an entity sets for itself sustainability performance targets and specific KPIs that they need to reach. And if they don't reach those KPIs, then there will be an increase in interest rates. In the case of EQT, for example, they've set 3 KPIs. One is the reduction of CO2 emissions for their entity, but also for their companies in which they invest. And then they've set 2 KPIs related to gender diversity. So they want to increase the number of women in their advisory professionals in the entity, but they also want to increase the number of women in the board of the entities that they invest in. And they have set ambitious target for that.
This is encouraging news. Allow me to stay a little bit with investors and the different kinds of investor categories you have. And what is interesting to know is how do you consider the differences or the similarities between institutional investor, retail investors, high net worth individual? Is there a same move going on, or are some faster than the others? Rejina, do you have, in your opinion?
Yes, interestingly, definitely within Malaysia, what we can see is that the institutional side is driving the demand, right? And I think partly this is because of it having more developmental sort of responsibilities. Whereas for the retail and the high net worth side, they're more short-term performance driven. So I think in terms of their demand for sustainable focused funds are very, very different. So I think, it's just a matter of time. We can't benchmark ourselves with Europe, definitely. And then if we look at even in North America, it's also the same, whereby the demand by the retail side is a lot slower.
Okay. Would you share that assessment?
Absolutely, absolutely, Rejina. I agree. Clearly, the institutional side understands the regulatory push and has a longer-term vision. We see that on the retail front, typically there's awareness, but there's probably not always the means to be able to follow that awareness. On the high net worth side, which is where I concentrate, where my group concentrates, typically the conversation is too much driven by the advisors, too much driven by the financial group, too much driven by the banker, yet, for the moment. And I think this is evolving. The whole logic of how much is in it for me in the shorter term is evolving towards how much of a difference is that investment making or not. We're not there yet. And we have to continue to invest, as I was saying earlier on, in education, in labelling, in solutions which are on the shelf rather than simply alternatives. But probably it's on the high net worth side that the learning curve is steeper.
Do you see this a similar path to impact investment? True impact investment?
Yes, and I actually share the views of the other panelists on the fact that institutional investors are more mature in terms of understanding the concept of sustainable finance. But I'd like us to take a step back. And last week, actually, we were ringing the bell, for financial literacy. And I discovered that 50%, according to the OECD, 50% of the adult population in the EU does not have enough knowledge of basic financial concepts. So we're already talking about sustainable finance. It's extremely complicated to explain. We've got a lot of acronyms that we like to use. But first, we need to address financial literacy. Then we need to address climate change literacy. And then the two will become sustainable finance. And there is a lot of work, again, to do on that. And it's complicated to explain it in a simple way. So that's really what we have to do in the coming years.
I promise you we will get back to this particular question now. So we are at the challenges. So there are many challenges the financial industry is faced to. One challenge in particular, interesting, is how hindering is the fragmentation of ESG standards between countries and regions of the world? And how does this impact the fundraising for sustainable projects? Rejina, if I could start with you.
I think, in this part of the world, there's a lot of work to be done. And I think, like I alluded earlier, we were talking about how data collection will be one of the challenges. So I'm glad to say that within Malaysia, at least, we've done quite a lot of inroads. You've got sustainable responsible guidelines within the Securities Commission for the Capital Markets, and then you also have the ASEAN finance ministers apparently agreeing to an ASEAN taxonomy that's supposed to be released before the end of the year. Malaysia, the central bank has actually released a taxonomy for the financial institutions, and then even the SE will be coming up with their own taxonomy. So there is a lot of steps towards, recognizing there's a lot of work to be done in standardization and reporting standards, etc. But I guess for a lot of fund managers and a lot of investors, it's also not necessarily a hindrance, but also an opportunity, right? Because then given the fact that just like from the ethical as well as value-based investing, these challenges and this differentiation of interpretation can also provide a lot of value add for individual investors. So, I mean, if you take a quick look on Bloomberg, there's over 11,000 indexes for ESG alone. And then if you take Sharia compliance investments, that's another 3,000 index available. So, and we're not even looking at the other types of SRI types of indexes. So there's a lot of opportunities there. But there's obviously a lot of challenges as well. And I think particularly within Southeast Asia, whereby the pandemic as well as climate change is really being felt in the last 2 years, I think, the time is now, rather than pushing it to 2050 or 2030. Thank you.
Thank you. Laetitia, would you add on it?
As Rejina said, EU started with its own taxonomy, and then of course the other regions in the world developed their taxonomies, and it's good, as Rejina said, that they are adapted to the specific needs of the regions. Yet we also need some sort of coherence or convergence between the taxonomies, and I think that's also the work of the International Platform on Sustainable Finance. And in that platform, specifically, EU and China are working together to come up with a common ground taxonomy that will explain also the similarities between all those taxonomies. So eventually investors can understand the specificities, but also the commonalities between the taxonomies. So that's really a good news. In terms also of the disclosures, there are a number of standards and frameworks around disclosures. But it seems also that we converge, notably when it comes to climate, that we converge towards the TCFD, which are the Task Force for Climate Financial Related Disclosures. So, for example, the G20 and the G20 and G7 countries have this summer said that they were supporting the TCFD, which is quite good because we know which framework to use. And there's also the work of the IFRS, which is the International Financial Reporting Standard, and they are building up a sustainability accounting standard. I don't want to throw too many words there, but in any way that means that internationally speaking, we are also thinking about sustainability disclosures framework that are meaningful for everybody.
So you're hopeful for convergence of this then?
I am, I hope, yeah.
That's good. So you have mentioned also a lot of different challenges. Anthony, what would you consider to be the main challenges apart from the lack of standardization for now?
I'd say results, actually. It's a continuation to what Laetitia and Rejina was saying. It's one thing to ensure that whether you're in Singapore, in Luxembourg, in London, in New York, we all talk the same way about the same things, and it's important, and ideally we'll get there, and we'll make the debate being not too technical and understandable by all, so it doesn't feel like it's a technician's field, but it's everyone's field, irrespectively of their net worth. But the real challenge is to make sure that we know how to measure consistently what good looks like, results. Because you could accept that there are slight differences, because we have cultural differences, we have different backgrounds, as long as we go towards the same goal. But how do you measure the efficiency of the results? I think that's a massive challenge. And I want to go back on education, because education is extremely important. I think it just takes one very famous CEO of a firm to tweet something about cryptocurrency, for everyone to actually realize that there are environmental impacts around cryptocurrency. And I think we should stop here and contemplate that problem. Laetitia was saying a minute ago that there's 50% of the population which has an issue with respect to basic financial literacy. However, everyone's interested in crypto. Mm-hmm. But people will really only get interested into crypto once a very well-known CEO tweets about it. Whereas we can spend months and years debating on the terminologies that we're going to use so that everybody understands. So that we today have means and measures, and I think you have another panel, Philipp, that you will be introducing, where we can go much, much quicker. So I think there's the challenge of pace and the challenge of results. And how do you measure that?
True. Laetitia, you indeed mentioned awareness raising and education as a key element in the success of sustainable finance. So what kind of projects do you do in order to address the problem?
Yeah, actually, that's the point, that we need to raise awareness about sustainable finance is something that we've realized also at the stock exchange, and specifically at the Green Exchange. And so last year in May, we've created the LGX Academy, which has this ambition that we want to try and close the knowledge gap and offer sustainable finance courses to all financial market players, not only in Luxembourg, but also beyond. And we actually work a lot with countries in Southeast Asia to explain what is sustainable finance, the basics, but also the instruments and the regulations around that. So that's the main initiative that we are carrying.
So, and you make somehow financial education as well as climate and environment related.
Absolutely. The courses are sustainable finance. So we talk about the basis of finance, but also about what is climate change and what kind of instruments can be used for sustainable finance and for transition finance.
That's very interesting. Rejina, as I could read in your CV, you are a coach and mentor on the side. What would be your take on the importance of education and awareness raising in sustainable finance?
Well, I think it's, I think one of the key challenges for most developing nations is the fact that, you're not getting the same access to opportunities and education in general. I mean, the COVID-19 pandemic has really impacted the education in a lot of Southeast Asia. So I believe Malaysia has one of the longest numbers of school closures, which is obviously a massive challenge for the economy going forward. But this is where the digital penetration within Asia, where I think we've got about 91% mobile penetration in Asia and I think that in itself will lend to a lot of opportunities in terms of education. And I think Indonesia is a great example of how they've taken mobile penetration to actually create a lot of opportunities and awareness. So I think part of the reason why, you've actually got 35 unicorns in ASEAN alone, and most of it in Indonesia, is because of the fact that sometimes, if you take things step by step, it might take a while. So, I think in terms of developing consciousness and awareness in regards to sustainability, it's something that you need to actually make it very approachable to a lot of people, to say that, hey, this is how it actually impacts your lives going forward. And I think the pandemic is actually a real good time for us to actually reset how we view things and how we educate people. So it's a great time for opportunity within Southeast Asia for sure.
Thank you very much, Rejina. I concur. This is now the moment to restart things. Sustainable finance, it's a huge project for the financial industry. There would be so many things we could discuss. Unfortunately, we are running out of time. So please let me thank my panelists, Rejina, Laetitia, and Anthony here in the studio for being here. Thank you so much for your attendance. And I would like now to hand over to Alex Panican, Head of Partnerships and Ecosystem of the Luxembourg House of Financial Technology, who will be moderating the next panel, From ASEAN to the world, internationalization of finance through digitalization. Thank you very much. Stay safe.
Thank you, Philipp. Very, very interesting panel. And it's good to see that the financial industry is working towards a better world because in the end, we are living on the same planet. So thank you, Philipp. It was very, very interesting. Welcome, everybody. Welcome for this live panel where we're going to focus on fintech, innovation in the financial industry, of course, but also scaling, and we'll touch upon talent. We are very lucky today because we have 3 experts, worldwide experts in the field of innovation. So first of all, on my left, I have the pleasure to welcome Erik, Wilgenhof Plante. I tried to say it right. Erik, you are the Chief Compliance Officer at Pinpong, a payment fintech company with activities in Asia, Europe, and North America. Joining us live from Singapore, I have my good friend Anuj Jain. Anuj, welcome. Anuj, you are the CEO and co-founder of Startup O, a partner of the LHoFT, and you guys are doing everything regarding global venture platforms for startup discoveries, investment, but also scaling. So thank you for being with us, Anuj. Last but not least, worldwide expert, as I said, in fintech and payment, Zennon Kaprun. Welcome, Zennon. Founder of Kapronasia. You are a leading financial industry research and advisory firm in Southeast Asia, and I would say even across Asia. Thank you for being with us. And Zennon, I will start the first question with you. We heard about sustainable finance, where technology is playing a quite huge role. So as an expert in the field, I would like to ask you, where do you see the technology going? Where do you see the innovation in the financial industry? And what's ahead in Asia? Because we have so much to learn in Europe from you. Go ahead, Zennon.
And I think that's a perfect segue from the previous panel, Alex. I think, when we look at sustainable finance, I think certainly across Asia, in particular here in Singapore and in China, really those 2 countries have kind of put themselves at the forefront of the adoption of green finance and technology to support green finance, because that is a pretty critical part of that. In many ways, Asia is part of the problem. When we look at the industrialization of the big countries like India and China, and across the region, what's happening in places like Indonesia. I know Anuj probably experiences this as well, but for a couple of months every year, there's a haze that comes over from Indonesia, from the palm oil plantations, where it's actually cheaper to burn the trees than to cut them down. And so, in many ways, Asia is part of the problem, but they're also part of the solution, because the financial industries are relatively nascent here, and they're really leveraging technology to create that digital infrastructure. We're seeing the launch of many different platforms across the region focused on green finance. So the ability to structure green finance products, to monitor the performance of those products, both in terms of the products themselves and then what they represent. So using IoT to look at what's actually happening on the ground. Asia is really at the forefront of that. And the 2 countries I mentioned, obviously China and Singapore, are the ones that really stand out. China, obviously through the financing and the green bond program, has been one of the leaders globally in establishing those financial structures. And then Singapore is looking to kind of build on its reputation and that it's built up in the fintech space on the back of its financial industry to really take the lead in green finance in Southeast Asia and indeed green fintech. The Monetary Authority of Singapore, the regulator here, has a program called Greenprint, which is focused on hackathons, funding, and grants for fintechs that are focused on green finance. So it's really early days in what's happening here in Asia, but very encouraging of what the future could look like.
Thank you, Zennon. One of the things that has been mentioned is payments, but also cryptocurrency. What's your view on the evolution of digital assets in Asia? Because it's a huge topic in Europe right now. So I would like to have your insight regarding that.
Yeah, certainly. And we've been looking at cryptocurrency since about 2013, when I was in China, when obviously China's regulators were a little bit more open to cryptocurrencies, or at least they hadn't cracked down on it. Maybe not open is the right word of saying it. I think different jurisdictions have taken different positions. I mean, the large populations of China and India have been relatively adverse to cryptocurrency, while there are many countries across the region that are somewhat neutral in having both, mining as well as usage and development of cryptocurrency solutions. Really, again, though, Singapore has taken the lead in this, and the ecosystem that surrounds not just cryptocurrencies, but blockchain and other applications within that space has really grown very rapidly. And that's somewhat enabled by the relatively open view that the regulator here, the MAS again, has had on cryptocurrencies within the country. Because again, similar to fintech, the way that this 725 square kilometer country with no natural resources is able to kind of make a name for itself is through services and the value adds that it can put on. So moving beyond fintech into green fintech and into cryptocurrencies makes a lot of sense for the city-state.
Thank you so much, Zennon. We'll come back to the different cultural perspective and how to scale your business. And speaking of scaling, I mean, Anuj, that's your specialty, because I mean, and Zennon explained, technology is lowering the barriers between industries. We have tech firms today trying to eat the financial world, but it's not so obvious regarding geographical barriers. And we've experienced ourselves from moving from Europe to Asia and vice versa. It's not always obvious. So you, as an expert in scaling, and you support startups, you support fintechs in Singapore to scale up all over Asia. What's your insight? What's your advice? And what kind of challenges and opportunities you see?
Thank you, Alex. I think, this question is brilliant, because this was the seed which kind of incepted our own vision at Startupo almost 5 years back. And the fundamental belief that we need a global village, weaving, the whole value chain of early stage ecosystem is have to be beyond boundaries, because there are three trends that I have observed during my journey for last decade in this ecosystem. And one of them is that this technology, as we understand, is becoming a commodity at large, if you really look at it, right? Hello, can you hear me?
Of course, go ahead. Yes, we can hear you.
I think that... No. So I'm saying in the last decade or so, there are three trends which I would like to highlight. And I think that's at the heart of what we do day to day with large companies to help them grow. One of the trends, as you mentioned, that the industry, the barriers between industry, the barrier to entry, all these things are going down because technology is becoming commoditized by the day. So it's no more a question of can it be created, but one who has to really, deep dive and understand, should it be created? Can it be commercialized? Can we grow it as a company across the world with fundamentals of business, as we all learned in our, in our youth, as we can definitely say. So this is definitely one of the things which people are seeing on a day-to-day basis. The second trend that we observed is the venture ecosystem, as you and I were talking the other day, is very, very opaque, very fragmented and across the world, and subjective and biased in its approach, but also very hyper-local. So there is a lot of trouble of actually companies for founders who are creating value in a particular mother geography. But how do you then, go across that mother geography to grow maybe in the continent, but how do you go beyond the continent? And that's a problem that we're trying to solve, and I'm going to just throw some light on that. What happens during this hyperlocal nature of industry is that who you know becomes very important than what you have built. And a lot of value is actually pissed off or leaked in the process. And the third thing that we see is the whole media, which also is in sync with the metric of who has raised how much funding, is something of a folklore and kind of, echo chamber for everybody to focus on raising capital. But as all of us who have built the companies know, that it goes far beyond just raising the capital. And one needs to have an approach to grow your company beyond the geographies. But most of the examples that we read, we hear about are very Silicon Valley and, a homogeneous market like US focused. And even Silicon Valley has like almost $1 trillion economy at the backyard where you can test and scale your ideas. But for geographies like Europe, for Asia, which are highly fragmented, it becomes even more challenging for founders to kind of, and I think because of this challenge, a different approach, a different resource and infrastructure and systematic way of scaling startups is required. So observing these three things, we kind of, realize that hyperlocal capital pockets and sort of lack of cross-border expertise or systematic way to scale companies is an opportunity. And I'm very happy to say that we have 2,000 plus companies from 47 countries on our platform. And it's truly a global village that we have created. But we not only invest in seed to pre-Series A companies, but we engage companies up to Series B from outside Asia and help them land and expand in Asia. And that's where I'd like to spend some time on why I believe European fintech companies can actually explore, but you have to go beyond a little bit of traditional ways of exploring Asia. And I'll tell you what traditional ways are. Typically, I've seen a lot of delegations between various commerce bodies, government bodies, and nothing wrong with that. That's fantastic. I've myself been part of many. But what happens is that after first 10 days of exploring and touching base, and it's more of a discovery tour, everything fizzles out when you go back because you get back into your operations. And not much success happens because there is no systematic way to actually follow on from there onwards. Or you end up randomly meeting people who have limited networks, or you just kind of, take a call if you are a company which has raised significant capital to set up very costly offices and figure out in 6 months to a year's time that a lot of money is wasted in just exploring the region, which is highly fragmented, have very different cultural nuances from country to country, have local know-how of people, what we call a relationship orientation, which is very prominent in Asia versus what they're used to in, say, European markets, possibly. But also, the challenge is how do you solve all this problem, not only for unicorns like Revolut and companies like Thought Machine, or even larger fintechs, which I've seen recently, like Cloud Currency, who has already come and set up like any MNC would do. But can we solve this problem for companies which have already proven in their mother geography, but they're still Series A or Series B, a level, and can still explore? So our approach to that, based on multiple experiments and many success studies, we are engaged with more than 50 companies from investment perspective or scaling perspective, realize that you need not one trick pony or just land up and expand and just experiment something. But what we weaved is a systematic approach which has warm introductions into roughly 250 odd corporates. And Singapore acts as a beautiful hub for testing your thesis and then expanding into the population of close to 650 million surrounding
that's the similarities,
Singapore.
The similarities with Luxembourg, because we are also kind of testing ground for many fintechs that want to explore Europe. But that's, it's music to my ears, Anuj, what you are saying, because what you are provided to those companies is really an ecosystem, and is the most difficult things to build. And I think, because you build the ecosystem for them, but you're also providing the funding. On the scaling things, what are the main challenges? I understand the fragmentation. So if it's fragmented, I should set up in let's say in Singapore if I was a fintech from Europe. But beyond that, what are the other challenges maybe on the regulation side? We're going to touch upon regulation with Erik. What are the challenges you perceive for companies and how to tackle those challenges? And maybe Zennon, if you have also an insight after that. Go ahead, Anuj.
One thing is there is a need to demystify this whole opportunity numbers that when somebody gets excited with 650 million population, they don't see that there are multiple sub-segmentation to this whole market sizing itself, right? So as I said, the media reports and other things are pretty biased in the whole approach. And one needs to be very, very clear about that, what's the actual size of the market that they're able to tackle at this, from point of view of what stage of company you are. So a lot of times the business plans are made based on these numbers which are published in secondary research. But when you actually execute in Asian markets, each market is like a startup all over again. And hence most of the companies that have engaged realizing that it is very important to even have a discovery, then set up and then scale up sort of an approach, rather than sort of putting a lot of fixed cost upfront. And as you know, startups always are in the motion of raising more funds. So I guess a little bit of demystification and a reality check is important before we build up the plans, and not getting too excited with the very large market number and then, falling short of it. But also, I think cultural nuances are another thing which is not easy to come by, and hence, know-how, the local know-how, because sometimes it's not just the introductions in the corporates, but local partners, channel partners are very, very important. And each country, unfortunately, works in a particular different manner because of on-ground realities, not only regulatory, but in terms of go-to-market is very, very different. You got to open doors in Japan are totally different than what you want to do it in Philippines. So partnerships and right partnerships are important.
It's very fascinating. Unfortunately, we just have 35 minutes, so I will have to be brief on some answer. Zennon, what's your perspective on that? I mean, you follow the most important fintechs all over Asia. You advise them. You advise the financial industry. Where do you see? What would be your advice for a fintech coming from Europe or North America, looking to Asia?
Yeah, and I think Anuj hit on a lot of what I would have said. I think the only thing I would add to that is I think people underestimate the competitive situation here. I mean, especially in a place like Singapore, it's a small market that you may want to target directly. But if you look at cross-border payments, there are at least 10 companies, 2 or 3 of which are unicorns, are already listed, that are tackling that market. In Indonesia, in Thailand, in all the countries around, there are a lot of fintechs that are tackling issues in that market. And one thing that we found very successfully for fintechs that are looking to come into the market is to look at some of the problem statements. I mean, the MAS every year through the Singapore FinTech Festival has the problem statements that they lay out for their accelerator. Just looking at those, that effectively is a blueprint for what the gaps are in the market, and can be a really interesting place for fintechs to start looking.
Yeah, because it's always the obvious question is, should I move? Does it make sense for me? And one of the first conversation I have with Anuj was, how much do I need as a fintech to move there? And he laughed because he said, it depends what you want to achieve. So thank you for that. Erik, I'm sorry that the discussion went on. Erik, I mean, you are the Chief Compliance Officer of Pinpong. It's one of the leading cross-payment fintechs in Asia. And you decided to set up your headquarters in Luxembourg for Europe. Why Luxembourg for you, as a huge Asian payment firm?
As compared to Singapore, for
As compared to Singapore, because you live all over the world, so you have a better understanding of the global structure of setting up a company.
I think, first of all, Luxembourg is a hub. It's an important hub, not just in fintech, but in general, because we are here in the middle of Europe almost. We have a big talent pool around us, not just in Luxembourg, to tap from. But most importantly, of course, for me as a compliance officer, is the regulatory environment. So we have a regulator here, CSSF, who is very much willing to talk, to learn, who works more as a partner than just as somebody looking over your shoulder to see if you do anything wrong. I think we have the same, and I've worked in Singapore for 14 years for various fintechs actually. We have the same in Singapore. The only difference here is that once you have your license here in Singapore, you can passport it. We've heard it before in one of the previous panels. Yeah. You can passport your license all throughout the European Union. So that makes very much sense, because then suddenly you have a market that you can tap that is very much larger than Luxembourg. Singapore doesn't have that. Singapore has its own regulations. Most of that is cross-border. So you can have some activity in Indonesia or in Malaysia, but there is not a unity like here in the European Union. And I've seen that with Brexit as well, because we have activities in the UK as well. The FCA, the UK regulator, has said, okay, we set up a temporary permission regime. You can still continue, but you need to go for your own license before the end of 2022. So that means that we will have basically 2 separate entities there. If you look at, I mean, we are pretty much a mature startup, but if you're a small startup, every time that you start moving to another country, it costs money. And as a founder, I just want to do 2 things. I want to do it fast, and I want to do it cheap. This is just. I've talked to many founders anywhere. This is just how it's done because, of course, you don't have unlimited money, so you can't set up like Amazon, huge and hire thousands of people. Like I said, second issue is, of course, getting talent, but we'll talk about that a little bit later. And then, of course, you need an environment that attracts the right people. And I think that, especially here in Europe, it attracts people from all over Europe, Luxembourg. You can see it in Kirchberg, for instance. The age of the average employee goes down. I mean, when I started in fintech, I was just one of the young people, and now I'm starting to get older, and you can see you need to have that talent. So that means that the effort needs to be made to educate the people. Once you have all that set up, there is a huge support also from the Luxembourg community in setting up your business. You have LHoFT, for instance. You have several other organizations that can help you set up here. Also some big names that also helps. Once a big name like Amazon, for instance, sets up, and they set up in a big way here. PayPal has their European headquarters here as well. That helps definitely. Alipay has their
we host them
well.
at the LHoFT. So
yeah, exactly. I know. And that helps as well because it's always good to be, thought of as one of the people that are in the same building as one of the big ones, because everybody wants to make it in the end.
Now, one of the aspects we discussed just before is, of course, traffic in the morning, which is quite similar to Singapore, if understood, but also the quality of life. I mean, to grow a family here, it's quiet, it's peaceful. Luxembourg is a bit like a golden cage for the ones that never visit Luxembourg. You maybe think you're going to come for 1 or 2 years to work, but you're going to stay a lifetime because the quality of life is quite good.
Well, it's like Singapore that way.
Just like Singapore. But by the way, it's quite personal what I'm going to share, but when I visited Singapore 2 years ago, I felt like in Luxembourg. I say I could live here. It was so peaceful and so quiet, and it was a bit warmer, which is also a good thing. But what's your perspective about the quality of life? You live again all over the world. What did you find in Luxembourg that you maybe not found?
I think the quality of life is very much comparable to Singapore. I mean, both are very much developed countries. We have basically everything here. Public transportation is free, which it is not in Singapore, but it's highly organized as well. Like you said, traffic is a pain, but that's the same in Singapore. So and you don't have these gantries here over the road, so you don't pay extra if you drive your car. What is also very much a thing in Singapore, of course, is social security. So in Singapore, if you don't work, you don't have an income, you're on your own, basically. There is very little government support. Here is a different system, so there is help. There is social security, but also social insurance, for instance, health insurance, etc., is all done on a government or government organization level. That's a different type of life security, especially if you have a family. I think that the medical facilities here are very much comparable. They're both very, very good. You could see that the response to COVID, for instance, was very similar. And you really feel that the government takes care of the country, which they should, of course, in the end.
That's the job.
Oh, of course, that's their job.
We have a great government in Luxembourg. No, but I agree with you. And one thing that Anuj, you said, and I think it was interesting, is, I mean, with the LHoFT, and that's why we work together, we are just like you. We build a fintech ecosystem. We welcome like a soft landing platform for fintechs from all over the world. We connect them with clients. We connect them with investors, with research centers, with tech partners. But there's one aspect where we not struggle, but we still have to work on it, is the cultural aspect of doing business. When you're coming from Asia, the way you engage with clients, the way you engage with partners and with your people, your employees, is not always the same. And I mean, I discussed with Erik because he's working for an Asian company and he worked with different companies before, also international. What's your perspective, Anuj, regarding as an European, what would be one thing I have to be careful on the cultural aspect in Asia, if I may say?
Well, not only as an European, I think as a human being in today's time, especially when change is the only constant, I think I do believe strongly in Alvin Toffler's quote, which says, the people who will only survive in 21st century are the one who can unlearn, relearn, and keep learning. So I think all kind of immersion programs and YouTube videos on learning Asian and all this stuff is great. It's much like I have to see videos on left-hand driving when I go to Europe. Similarly, you can do academically as much, but it's about an attitude. If you come as an Alice in the Wonderland with respect and with a little bit of a wonderment, that how Asia actually clicks, and much like Luxembourg, as you said, golden cage, we call it Hotel California. You can easily come in, but difficult to leave, because there's so many layers, and you keep peeling like an onion. And you learn every day. I'm here for now 20 years, originally from India, but still, Asia is such an exotic, offering from Japan to Jakarta that it takes a lifetime or maybe more to unlearn and learn all the time. But it begins with the attitude. Do you want to really, completely shed what you are trained in and then adopt something totally new?
Love it. I like the onion idea. Love it. Zennon, I mean, what's your insight? One advice for international companies setting up in Asia, Southeast Asia?
Yeah, I think it's kind of a combination of the previous answers. Each country is so different that it's very difficult to one singular Asia strategy from a business perspective or from a fit and cultural perspective. I mean, every country is so different. Singapore benefits from the fact that it's very multicultural, so you can experience many different backgrounds and ethnicities in one place, which can help. And oftentimes the staff and the people that you can get here, which is I think the topic we'll be on next, is it's much more diverse. So if you want somebody from an Indian background or from a Chinese background, a Malaysian background, Indonesian and Philippines, you can find them all here because it really is a melting pot of many different cultures and backgrounds. So from that perspective, although it is to a certain extent what people call Asia Light, much like Hong Kong is kind of China Light, it does have its advantages, certainly.
Thank you for your feedback. Up to you, Erik. Advice to Asian companies setting up a business in Europe and mainly in Luxembourg. What have you seen as main challenge, or what would be your advice?
I think the main challenge, again, the people working here, I mean, there is kind of a culture clash whether you go from Europe to Asia or from Asia to Europe. I did both, and there was enough time between the two to have a culture shock actually both ways, because I came back and then suddenly it was completely different.
But you survived. So.
But I survived, exactly. And I think one of the main things there is that both countries, but this goes for a lot of other smaller countries, have a lot of advantages. As a business, if you want to attract the right people, I don't think that location would matter that much anymore. We've seen, especially with COVID, a lot of people working from home. We've also seen in the past already with unicorns setting up, they need a lot of people working for them. They can get them anywhere. So I think the most important part is how much support, and not just in money, but just support in general, does the local government give you. I think both in Singapore and in Luxembourg, but also, for instance, Abu Dhabi, I just have to name it because I was there as well for some time. They have the same attitude where they want to attract startups. It's not like in the beginning when you came with a plan and a local regulator would say, what are you doing here? I mean, you're 20 years old, you think that you're founder of a fintech company, go away. It's not like that anymore. So, and you need to have a country that is internationally based, so that looks outward. And Luxembourg,
and that's what we are. Yeah.
That's, Luxembourg, whether it's German, whether it's French, Luxembourgish, of course, but even Dutch, you can get away with it here in Luxembourg. It's one of the most international points that I've been. And also, of course, the borders are completely open. I have to say that is an advantage over Singapore, because you don't have to wait 2 hours at the border to cross. But yeah, I think there are advantages in both. One thing I also have to say, and what I'm missing here, I have to say something, of course.
Go ahead.
The Singapore food, you don't have it here. So a food court or two would be great, but we'll see.
Yeah, was fantastic. I mean, we still have 7 minutes, and I want to touch upon a subject that really it's deep to our hearts at the LHoFT. When we started the LHoFT 4 years ago, we never thought about education, but we quickly understand there is no innovation without education, and talent is critical. I mean, talent is I would say the cornerstone of everything we are doing in fintech, and it's a problem because we are lacking talent. If I take the IMF last report, we are lacking each year 1.5 million engineers, tech developers. And this problem in 8 years' time, in 2030, will be 85 million. So my question to you guys, what can we do to fill up to 85 million tech talents? So Zennon, the question is for you. I hope you have the answer. And no, I'm kidding. What's your perspective about the war on talent in Asia? Because we see more and more tech developers and outsourcing towards Asia. We even have Russian companies that don't outsource to Russia anymore. They outsource to Sri Lanka. So that's quite weird for us to see that it's this huge shift to Asia. But it also makes sense because I think 90% of all the new tech talent are coming from China or India. So Zennon, what's your perspective on talent?
Yeah, I think a few different things. In terms of that outsourcing, certainly China and India historically were some of the large destinations. I think the other thing that we've seen is Vietnam picking up, particularly in development talent. A lot of the fintechs that we work with here have outsourced to that, and even there are a couple of companies that actually bridge that, so provide the front end, kind of an outsourced base of developers in Vietnam specifically for the fintech space, and that's largely driven by the fact that the labor market here in Singapore is very tight. Up until this past weekend and a couple of weeks ago, it was very difficult to bring people in. So we know many companies that had work pass holders or work permit holders that were stuck overseas because they couldn't get a slot to come into Singapore. So that made it very challenging. And then the government has really cracked down on the employment pass awarding, or basically to get a work visa here in Singapore. So it's become much more challenging. And this is something that we faced as well, is that, on one side, there is a fairly substantial local talent base that has gone to university here. But there is a price attached to them, and over the pandemic, because of the challenge of mobility around resources, if you had to hire in Singapore, which many fintech companies said, no, we have to hire in Singapore. So that means it's got to be either somebody who's here, a permanent resident or local, or somebody who's here on a long-term visa pass that is able to be hired by one of these companies. So it's actually been really challenging, and we talked to some of the largest tech platforms like the Facebooks and the Twitters here, and they're struggling to maintain or to retain talent. And it's a very competitive market. I think if you are a reasonably accomplished late 20s developer, local Singaporean, the market is your oyster. I mean, you can get incredibly competitive offers, but it makes it very challenging for companies to hire, especially if they're fintechs and just starting out. I mean, I'd love to hear what Anuj has to say and what his portfolio companies have faced around that. But even for us as a consultancy, we found it challenging.
Yes, indeed, Anuj. What's your perspective about talent?
Yeah, no, absolutely, Zennon. I think it's no more a secret, and it's pretty vocally. A lot of leaders have expressed this concern, and this is accentuated by the fact that companies like ByteDance, Zoom, Grab, and all these large companies are fighting for the same talent pool. So growing startups definitely suffer from the brand perspective to attract this talent, and the cost of living and with work path situation is tougher. However, there's always a silver lining, and then some of the portfolio companies have done pretty beautifully, that Singapore itself is a hub. And there, one of two key people for, I would say, growing companies. The brain of sorts needs to be in Singapore, but then the limbs and a lot of developers in nearby countries are a great asset. Vietnam has 100,000 engineers coming out every year. Indonesia has 140,000, and we know already about India and China. Sri Lanka, you mentioned, is around 5,000 only. It's not too much, but they have proven recently in many which ways in NASA Institute competitions and Microsoft that they are able to do certain type of high-end work very well. So, one needs to understand the markets. I mean, there are challenges in Vietnam from language perspective, but it's very structured. There are a lot of companies who take care of this aspect of translating in between, but the talent is superb. And so yeah, you need to adapt to this evolving situation and keep few people in Singapore who are architects and key engineers, and then have a large development source. And very soon we hope that this travel will open up. Then, like good old days, all these flights 2 hours, here and there, will be able to manage these remote teams even much better with the camaraderie aspect of it by visiting them physically.
Yeah, indeed. That's maybe another, let's say, similarity with Singapore and Luxembourg, because as we have all those tech companies, they are attracting talent. They are changing companies, but they're not leaving Luxembourg. So yeah, the golden cage again. And we are also working, government is giving grants to developers coming to Luxembourg, to those companies. And we are working on education. So we are forming kids starting 4 years old. So if it happens that you visit the LHoFT during weekends, you might see kids running around playing with robots and stuff like that, because you need to prepare them young. So Erik, you work for an international company. How do you tackle the talent problem?
Yeah, it's a challenge for us as well. We do have large teams in Hangzhou, for instance, in China. We have entities all over the world, but getting somebody local is very difficult. Having said that, we do manage. One of the things, and I've mentioned this before, is the difference in culture between Asian companies and European companies. It should not be underestimated. If you are a pure Asian company with pure Asian management, the 911 or 956, you call it, don't expect that you can attract local talent and then get them to work until 11 o'clock at night here. I mean, it just doesn't work that way. So there is a kind of you need to adapt to that, but we managed very well. I think that the larger you get, the better name you have. People want to come to you. If you are just a startup, you have to have a very good idea, and you need to be very persuasive to get people to join you. It's about building trust. If you are a medium-sized company and you already have built a name, everybody wants to work for Google and Facebook, but there are so many companies beyond that are smaller and are still very good names to work for.
One of the critical aspects you just said is everybody wants to work for Facebook and Google. Not many wants to work for the banks. So we don't have time, unfortunately, to tackle the question, Zennon. But how do banks in the financial industry, attract talent? That's maybe even a more difficult question to answer. My friends, I mean, it was a fascinating panel. Thank you so much. But all good things have to come to an end. Erik, Anuj, Zennon, thank you for your time, sharing your expertise. And now I would like to hand over to Mr. Jean-Paul Senniger, the ambassador of Luxembourg to Thailand, Singapore, Indonesia, Vietnam, Malaysia, Laos, and Myanmar. Jean-Paul, I hope that the panel was interesting for you, both of them. I miss you, and it's a shame that we cannot meet for the Singapore FinTech Festival this year, because we had a great time together 2 years ago. Jean-Paul, I'll let you the last words. Thank you very much.
Well, hello everybody. Before concluding this very insightful webinar, I would like to thank our panelists from Southeast Asia and Luxembourg for their interesting and enlightening presentations. I would also like to briefly share with you some nuggets of information regarding Southeast Asia's economic integration and the region's growing ties with the European Union. In brief, no clouds are to be seen on the sky of EU-ASEAN relations. This is not the case because we are too far away from each other to fight. No, we have over the years been nurturing a fruitful relationship in our economic interactions as well as in the field of economics, resulting in last year's upgrade and official recognition of the European Union as a strategic partner for ASEAN. And the figures are impressive. Over the last decade, total EU trade with ASEAN countries has grown considerably. In 2020, ASEAN exported over 120 billion euros in goods to the EU, and the EU exported close to 70 billion in goods to ASEAN. Bilateral exchanges of services amounted to some 95 billion in 2019. What is true for the European Union is true for Luxembourg, especially in the field of financial relations, as my home country established itself as a center of excellence for international finance. No surprise, therefore, that trade in financial services with ASEAN is literally through the roof in recent years, totaling 5.6 billion in 2020. Needless to say, Singapore is our key partner in the region as far as financial services are concerned. But we observe a solid and sustained growth in Vietnam, in Thailand, in Malaysia, and in the Philippines. Luxembourg can boost itself to be in the leading position when it comes to international funds. Indeed, some 79% of foreign funds, well, that's about 2,300, distributed in Singapore are Luxembourg domiciled funds. The landmark listing in April this year of Thailand's first sustainable sovereign bond at the Luxembourg Green Exchange reflects this trust and the growing business opportunities between Luxembourg and ASEAN partners. This same trend is witnessed in FDI flows. In 2019, Luxembourg's net FDI in Asian countries totaled 7.2 billion, up from 6.2 billion euros a year earlier. We are all aware that the ASEAN region represents one of the fastest growing consumer markets in the world. Over 380 million people, or close to 60% of its population, are under the age of 35. This useful population produces a tremendous demographic dividend at the same time as ASEAN's middle class is expected to more than double in size by 2030, creating a consumer class of over 330 million. The effects of the COVID situation will stay with us for quite a while, the positive effects just as much as the more adverse. Speaking of financial services, the push for digitalisation, e-commerce, electronic payments, and further use of digital currencies, blockchain technologies, or sustainable finance are but a few factors to open new opportunities. The ASEAN region will certainly embrace these new opportunities, especially in the field of sustainable finance, another field where Luxembourg has established itself as a reference. May I just remind you that some 50% of all green and sustainable bonds are listed at LGX, the Luxembourg Green Exchange, among them those by the World Bank, the EIB, and major sovereign issuers. Digitalization has been and will remain a key driver of growth across ASEAN, in tandem with consumption habits moving online, backed by the fast expanding digital networks, smartphones, and internet users. This trend has seen a strong acceleration during the pandemic and is certainly here to stay. ASEAN countries are actively grooming tech entrepreneurs, but also attracting huge investments in startups. That is why ASEAN is now home to 40 unicorns. out of which 19 have been christened so far this year. When it comes to EU-ASEAN relations, it is crucial to recall that our two regions share common values and principles such as rules-based international order, effective and sustainable multilateralism, as well as free and fair trade. The upgrade last year of EU-ASEAN relations to a strategic partnership level further anchors our common ambitions and enhances existing areas of cooperation, while it also unlocks new fields such as in connectivity and green alliances, just to name a few. Our two regions have made joint commitments towards the achievement of the Agenda 2030 and the SDGs, as well as the Paris Climate Agreement. As we've heard today, the needs and the challenges across the region are huge, and so are the opportunities. As one of the most open economies in the European Union and in the world, Luxembourg has welcomed the conclusion of the recent entry into force of the EU-Singapore and EU-Vietnam free trade agreements. We are committed to a swift conclusion of FTAs with Indonesia, Thailand, and Malaysia, as these FTAs will boost investment opportunities and trade flows between our two blocs. So in conclusion, the future looks bright for further dynamic interactions of the European and ASEAN financial services, while market opportunities are huge. Right now, this region's financial service sector has all the right ingredients for it to flourish, spurred on by positive trends and supported by enduring and strong relations with the European Union. So, should any of our participants today have questions or seek support regarding business opportunities between Luxembourg and Southeast Asia, please feel free to contact me or my team here in Bangkok, and of course the colleagues at LHoFT in Luxembourg. Thank you so much for your attention, and over to you, Chris.
Well, thank you very much, Mr. Senniger, for those excellent words. And I think just listening over the course of today, I think one of the things that has really struck me is, in some ways, the similarities between Europe and the Southeast Asia. You know, we're essentially collections of countries with diverse and different cultures that are finding interesting ways to work across borders. And that are facing now, you know, increasingly global challenges with green finance and COVID being two examples of these. Well, with that being said, all it remains for me to do is to wrap up today's event, saying thank you to our sponsors and thank you to all the speakers for joining us today. And we look forward to hopefully welcoming you back at our next event, which is happening on the 26th and 27th of October, where we'll be organising the Sustainable Finance Forum, a major event focusing particularly on that topic of sustainable finance. So from here in Luxembourg, thank you very much.